The dreaded brown envelopes, or remedial pension saving statements, as we're now calling them, are back. And they are part of what's called the McCloud remedy, which some are calling the biggest change to the NHS pension in years. In this episode, we are going to tell you everything that you need to know and everything that you need to do if you're expecting an envelope, or if you've got an envelope, or if you just want to know what are the new dreaded brown envelopes about. Of course, this is a highly specialized area, and therefore you need an absolute expert. And for that purpose, I'm delighted to welcome back to the podcast. Well, it's not really back to the podcast because you're just with us full time now, aren't you, Andy? But Mr. Andy Powell. Morning, Andy.
Yeah. Morning, everybody. My favourite subject at the moment has been causing me some headaches over the past few weeks, but hopefully we'll give you some top tips of how to try and navigate the problems ahead.
Before we get into that, just remind us why you're the expert. What is your CV?
Yeah, so my background has been as a medical specialist accountant for the past 30 years. I work with a company called Forvis Mazars as well as Medics Money. And I also am a board member of the Association of Independent Specialist Medical Accountants. So have been doing a lot of this work for a long time and liaising with a lot of the experts in the industry. And there's lots of them out there, which is great news for everyone.
There are lots of them out there in the circles that we hang out with, but it's really important that you do get expert help with this if you need it. But we're going to cover that later. But before we do, let's just get into what is McCloud? How did we end up where we are now?
Yeah, so going back over a brief history. So back on the 1st of April 2015, a certain number of people in the public sector were required to move their pension history going forward into the new 2015 scheme that was created at that point in time. And basically at that point in time, it was anyone in the NHS scheme who was under 53 and a half had to move on the 1st of April 2015. And then there was a transitional period that ran to the 31st of March 2022, where older members transitioned at that point in time. However, it was subsequently taken to court by both judges, so Judge McCloud and a firefighter called Sergeant, who took cases through all the courts of appeal, and the government were ruled against by the Court of Appeal. And it was decided that actually this whole transition phase was illegal, underage discrimination, and really because what they did at the time is they protected really older members who didn't have to transition. So younger people had to transition, older members didn't. And because of that, effectively the government were told you're going to have to wind all this back. So we have, therefore, what's called the Public Service Pension Remedy, which is rolling back everyone's pension career history from the 1st of April 2015 to the 31st of March 2022, back into the scheme they came out of at that point in time, which in the NHS is either the 1995 or 2008 scheme. However, that's not the full story, because actually what this relates to is tax, because this relates to the annual allowance tax charges. And many doctors have been faced with annual allowance tax charges. It's been much commented on, particularly in these podcasts, and we've gone over it quite a few times in the past. Higher paid doctors tend to or have had annual allowance tax charges in the past. So if you had an annual allowance tax charge over that 7-year period, then actually that's going to change. It's all going to get recalculated because the method of calculating it is different from the different sections of the scheme. And because it's being recalculated, you're then potentially going to have to then resubmit all that tax information for 7 years, plus a further 8 year. So the 2022-23 year was also parked because we knew this was a problem. So 8 years worth of data has to get submitted to HMRC, recalculating all your tax charges or putting in new tax charges if they're relevant, and dealing with all that compliance. So that's where we're at, which is the point of these letters. The letters give you the pension information, the pension growth you've had for that 8-year period. So you've then got to do something about it.
Yeah. Okay. So should we go about where do you even start? Where's the first step on what you need to do?
So the first step is something called triage, and doctors will be very familiar with triage. You do it all the time. The issue is that they've sent out, I think, something like 57,000 letters at the moment, and probably by the time the process is finished, it's going to be touching 100,000. Of that, though, not everyone has a tax problem. Some people, because of the way the annual allowance tax system works, you get an allowance each year. And you're allowed to go back to the previous years to see if you've got any unused allowances available. So even if you've gone over the limit in one year, you may not actually have a tax charge because of previous years. So there'll be some people getting these letters who actually don't really have to do anything. So what they have actually set up is a triage tool. And it's probably worth us going through that triage tool because actually it sets out some of the questions and some considerations of who's going to be affected. So the triage tool is available on the HMRC website. And so there's a page called Calculate Your Public Service Pension Adjustment. And if you scroll down to it, about halfway down is a before you start section. It says, and there's a link through to something that says, check if you are affected by the Public Service Pension Remedy. Red light here, do not click that, okay? Because that isn't actually the full checking bit. That's not the full triage service. It's just something that's been left around to check actually if you're going to get rolled back or not. It doesn't actually check the tax position bit. So you have to continue scrolling all the way down and you'll see a Start Now button appear. So you click on Start Now. And it's going to ask you if you want to sign in to using the government gateway. So you don't have to do that. Okay, to do the triage part, you do not have to sign into the government gateway part. You can just sort of skip that, and there's a continue without signing bit, which you click onto. It then asks you various questions. Do you want to overwrite a previous submission? I'm going to say no. And then it says, are you impacted by the Public Service Pension Scheme Remedy? And this is, it sets out the conditions here. You have to have worked in the NHS between the 1st of April 2015 31st of March 2022, and you have to have been in the scheme before 31st of March 2012. So if you're in that situation, we can just click yes. It then asks what tax charges you're going to be impacted by you. There's annual allowance and lifetime allowance. We are only going to concentrate on annual allowance. Lifetime allowance is yet more complications to this, but let's just concentrate on annual allowance. And then it asks the biggest question. Have you received any of the following? A revised pension saving statement, a new pension saving statement as a result of the remedy, and something called a remedial service statement. So what is happening at the moment is people are getting, it doesn't help because everyone calls it differently, but the NHS is calling the Remedial Pension Service Statement an RPSS letter. And you'll know it's an RPSS letter because it has pages and pages of numbers. It's not like a normal service statement you get. If you answer no to that question at this point in time, you will not be able to go any further with triage. Well, there's a few more questions you can answer, but actually it will say you can't use the system to do anything. And the reason for that is if you haven't got an RPSS, you can't do anything at the moment. You have to wait for that to come through because you are required to use their data. You cannot use your own data. So, a really important point, if you listen to this and you haven't got that brown letter, then actually at the moment you can't do anything. So you have to wait. And we'll come on to later on what you can do in those kind of situations. But I'm going to just click yes, assume we are. The next question is, were you a protected member? And again, this is basically to screen out people who didn't transition. So protected members are ones who weren't transitioned. So I'm going to say no to that because otherwise it's just going to turn me out. Then it says, quite crucially, did you pay an annual allowance tax charge for any of the tax years between the 6th of April 2015 to the 5th of April 2022? Okay. If you answer yes to that, automatically you're going to get through triage and you are going to have to go for a full submission because anyone in that situation who's not a protected member has had annual allowance tax charges previously will get revised annual allowance tax charges, so they have to do something. So I'm going to click yes to that. And actually, it's defaulted me straight to the end, and it says you're eligible to use the Public Service Pension Adjustment. Okay, which means I have to go on to the next full version. We'll talk about it in a second. I'm going to go back and change my question now, saying I didn't pay annual allowance tax charges. So it's going to ask me more questions. The next one is, have your contributions changed as a result of the remedy? And what this is trying to get out is principally GPs who've been subject to annualisation in terms of working out their tiered rates. What they're trying to work out here, because if you go back in the 2015, so the annualisation applies only to the 2015 scheme, and you haven't got a clue what I'm talking about, it's probably not relevant to you because people that do know about it. But if you go back into your legacy scheme, 95 or 2008, there wasn't annualisation, so it could actually change the rate of tier that you were paying. So it's asking about that. I'm just going to answer no, though, at that point in time, because at the moment I'm not bothered about that. It then asks me, has my pension input amount changed? And it asks me, has any of my pension input amounts, and that's the growth that's shown on your letter, for any tax years between the 5th of April 2016 to the 5th of April 2022, increased as a result of the public service pension remedy. We will have some people where it's increased, and some people will have more tax to pay. Again, we'll come on to that in a second. So I'm going to answer yes. No, I'm going to answer no. Okay, because it will generate another question. And then the final question, or one of the final questions, is then it goes on to 2020, 2023. So at this point in time, all my questions have leading to me to an answer that says, actually, at the moment, I shouldn't be affected by any of this. But then a further question, in the year 2022-23, did you have a pension input amount over £40,000? So if you did, I'll click yes, continue, check your answers, continue, you're eligible to use the public service pension adjustment service. So you have to go through that triage to work out if you actually have to do it. If you get anything that says you don't have to use it, fine, save it. Do take a copy of it, because HMRC might look at this and say, down the line, we know you got a letter, why didn't you do anything? Well, if you said, actually, I went through triage and this is what it showed me, then at least you've got some history. So that's the first point of call. So assuming we've gone through all that triage, and you have to do that first, you then go to continue, and then it starts asking you a lot more questions. So that then goes into the point where essentially you then have to submit the data. So I'm not going to go through this bit because it can go on for over 200 pages, and I'm not sure we want to record the longest podcast in history. So you've gone through triage, you've got to actually then complete the full submission. And basically what the full submission is then submitting all your annual allowance data, revised annual allowance data, and all your tax data covering 8 years. So we've got from the 1st of April 2015 to the 31st of March 2023. You have to put that into a tool, and you can do that yourself. You have to, if you do it yourself through a government gateway address, you can save it, you can re-enter the data, you can submit the data yourself, but you are putting 8 years worth of tax data in. So you have to have access to all your tax data. You have to understand the rules around the pensions annual allowance and tapering, because that changed over the period. And, you will then have to submit various data. And it's quite complicated. As I said, in complicated cases, you could have 200 plus entries that you have to manually key in, which is going to take a lot of time and is going to be prone to errors because you're keying stuff in. I would just point out there, one thing I did miss on the triage thing, because it just didn't come up because of the answers I gave in. It also assesses your income levels at some points. And that's to do with the tapering. So we used to have a tapered annual allowance if your income was above 110,000, and that moved to 200,000. So it's assessing if your income in certain years was above 100,000 or 190,000, just to catch those taper people as well. So yeah, you've then got to make a full submission. If you do that submission yourself, it will then go into the HMRC system. They will then assess what tax needs to be paid, or indeed what tax is refunded to you. If it's refundable, then it comes back to you. If it's tax, you have to pay tax, they will require you to pay tax. And it's complicated. I can't get over the fact it's complicated. I'm an accountant, and I'm probably one of the people that's perhaps as close as anyone to this system at the moment. And it's hugely complicated. And what doesn't help is they keep changing the rules. They keep changing things that are in the background, which you can access. And one of the useful things is something called, we've talked about loads of times on this podcast, an annual allowance and service extract spreadsheet, which is also called an O5 report. Those were really useful because actually it gave you all your data, and you could actually assess whether actually some of these figures looked right. At the moment, they've suspended those from being issued, and we don't know if they're coming back. So it's going to be quite difficult where you've got really odd numbers. Unless you got your backing data to see what income they've used for you for those years, it's going to be really difficult to assess whether these figures are wrong. But yeah, so that's essentially the process. And we've got a whole load of forms, a whole load of data to be entered, and you've got quite a short timescale to do it by, because actually we've got various deadlines in place. And the first one is rapidly coming up, which is the 31st of January 2025. And 31st of January 2025, anyone who ends up with having to pay some tax, and this could just be a 22, 23 person just has tax for that year, they have to submit this data by then. If they don't, they're at risk of getting interest and maybe penalties. I think penalties are very low on the horizon, but interest could be, because that's the cutoff point for making any tax payments. So you've got to act really, really quickly. And I just don't think it's actually practically or pragmatically possible. Most of the people working in the industry are pushing for a movement on that deadline. Simply just relaxing the interest and penalties rules would help. Because, if we've got 57,000 of these to deal with, they've all come out late. There are errors in them all over the place, that it's going to take an awful lot of effort to get through this, however much resource there is out there. So that's where we're up to. If you get that letter, you have to do something. You firstly have to triage. I don't know if you call it pass triage, or you'll probably say fail triage. Fail triage means you have to go on to the next stage. You then have to enter all the data, or appoint someone to enter that data for you.
Awesome. Amazing demonstration and outline of what is a really complex issue. If you need more help, so triage is really important, okay? And I think most of us would be confident doing triage, but I just wanted to go through where you can get extra information. So this is the Medics Money website, and we have an entire section dedicated to McCloud, and have done for several years, almost like we knew this was going to be a nightmare. So if you click the drop down here, and then you go to McCloud Judgment, it will take us to all kinds of useful information, a 3-minute explanation of McCloud. Who's eligible? Am I affected? Can I claim compensation? And this is a really useful bit here. I think we're going to talk about compensation and who can claim it in a minute. Maybe I'm jumping ahead, Andy. Apologies for that. But I really love this link here, because you click this link here, just shows you who can get it. But also, who do you need? Do you need an accountant or a independent financial advisor, an expert independent financial advisor? So I really love that table. But for the purposes of what we're talking about today, this is tax. And so if you have an issue with this, go to the Find an Accountant section on the Medics Money website. And it's really important, as you know, long-term listeners know, we only work with the best specialist medical accountants in the business. It's really important that you get an expert to do this. So yeah, what did I click? I clicked that. I was trying to remember how to use my own website. So I've clicked McCloud NHS Pensions Tax Support. I'm a GP partner. And then what we do is we match your unique circumstances to the best advisor to you. And I think we've matched over 20,000 doctors now. There you go. Everyone can see all of my emails now. Let's go with this one. And it will show you the best advisor for you. Okay. So then you click, select that advisor, and off you go. They're going to be different for everyone. It's matched to your own circumstances. So find an accountant, and then click McCloud NHS Pensions Tax Support under the accountant section.
Okay, so I'm going to jump in there, because time, when we wrote this originally, the full guidance wasn't out. And in fact, they only updated the guidance, I think, on Friday last week. So I suspect there might be a few IFAs out here who are going, oh, what about us here? We're part of this process. Well, you are part of this process. So the definition for this part of compensation is there is up to £1,000 available for compensation with help completing this process. Firstly, I would say it doesn't cover the triage part. So if you just want triage and you don't have to go any further, at the moment they've said it's not automatically covered, but the thing that came out on Friday said they will consider things on a case-by-case basis. So there is a bit of a caveat in terms of just the triage, that actually, will there be compensation for it? Albeit triage shouldn't really cost an awful lot, because triage is someone taking your data and quickly answering the questions on your behalf and getting an answer. And a lot of people will end up, having to go to full submission anyway, because there are so many ways you can basically fall down, 40,000 in 2022, 23, 1 year's gone up, 3 years have gone down. A lot of people won't pass that, will have to do a full submission. But what this is then, the £1,000 is then to compensate you for assistance with what they call accountancy advice. But they do sort of allow now, it's originally it was accountants, and then it's accountancy, and it's all kind of, terminology is quite key. But I think, there are IFAs out there doing this as well, I would say, before they just all contact me on Twitter and say, you didn't mention us, because there are other specialist firms out there as well who may not directly fall into the IFA or accountancy side. But, you're right. This is mainly an accountancy exercise. It's not a pension exercise as such, and it is a tax exercise. So A lot of accountants will be doing that. And I know a lot of the accountants I work with in the ASMA arena will be assisting their clients on their behalf. So that was
really, really good point, Andy. And just to point out that you mentioned there are some specialist firms that are just doing this kind of pension work, basically. They are also, if they pass our due diligence checks and they are experts, then they also are Medic's money. So hopefully that keeps the IFAs calm. And I did show that table as well, which does say, when you need an accountant, when you need an IFA, because ultimately it's about getting the right help for your circumstances. So I think the IFAs listening will be reasonably calm. But if not, just send it to Andy's Twitter, not ours.
Yeah. So when we come on to what's called contingent decisions later on, IFAs, listen out then, get that Twitter anger down, because this is where you come into your own at that point in time.
I haven't been on Twitter for a while, but I sense you might have been causing a bit of trouble on there. But let's move on to more productive things, arguably, which is like the number one. I hang out with GPs because I am a GP. The number one question for GPs is, at the moment, I haven't got a remedial pension saving statement. So who should be expecting one? And what do you do if you are expecting one, but you haven't got one?
So, who should be expecting what? It's probably best to answer who. Well, first of all, it's probably easy to answer it from the other way. Who shouldn't expect one? So, firstly, if you are a doctor who has never had annual allowance tax charges, your income, has never been, I guess, a consultant level or GP partner level or high earning GP level, then probably actually this won't impact you at all. So you may not actually ever get a letter. But there will be people that actually know they are impacted who haven't got a letter. And who do they cover at the moment? Well, firstly, we've got people that have accessed their pension already. So if you accessed your pension before the 1st of October 2023, at the moment, you will not get a remedial pension saving statement letter. And the reason for that is those people will have to make a pension choice as to whether they want their benefits that were in payment to go back into their legacy scheme or in the 2015 scheme. So they'll be getting a whole heap of new information coming through. And that's when the IFA advice may come into its own, because IFA people can then advise what's the right route for them. They will have to make that choice, and then they will get a remedial pension saving statement based on that choice. So they won't get it at the moment. GPs, basically, at best, your pension record will be up to date to the 2022-23 year. But the remedial pension saving statement requires that to be up to date for all the years up to that point in time. And we know many GPs who have got gaps in their career history and are still struggling to get their pension record updated. So if you've got a gap, you're not going to get one of these. And also, if your 2022-23 return didn't get processed before August this year, probably around July, probably at the latest, you would have missed the sort of biannual upload of data that goes from PCSE in England to the pensions agency. So that's particularly pertinent to England and maybe Wales. So you've probably missed that cutout. So your pension record won't be up to date. So GPs fundamentally have to carry on that process of battering down and trying to get their pension records up to date, because if you've got any gaps, it will be delayed. Doesn't mean it's a problem, because if, about this cutoff date, so this first date coming out 31st of January 2025, because if you haven't got one and we get close to that deadline, you've still got 3 months from the receipt of the letter to act on it. So there is a bit of a rolling 3 months on. I'm not sure that's long enough either, to be honest. So we've got those. We've got Scotland's an interesting one. Scotland are a bit behind the curve in terms of releasing this data to people. And we didn't think they'd been issuing remedial pension saving statements. But I have seen my first one this morning. So someone said, no, I have got one. I've got him to actually send it to me to confirm it is one. And it is one. But we have also seen some problems in their data. And the data they're sending out in Scotland isn't as detailed as the English and Welsh stuff. So that's a slight problem as well. And then we've got I don't tick any of those boxes and I still haven't got a letter. Well, I think we've got something like 10,000 people that are going through a manual calculation process because they've got either slight complications with their pension record or slight complications with their career. They might have multiple jobs, etc., or which are causing problems. So they're going through that. And a lot of people are going to the pensions agency at the moment going, well, I think I'm covered. Where's my RPSS letter? And they're saying, basically, we can't tell you when you're going to get it, which isn't particularly helpful. particularly when we come on to 23, 24 as well. That's going to cause problems. So whole heap of people that don't get it. Biggest group by far are those just not impacted by it. So, if you're perhaps in one, a resident doctor post, then probably you've probably never been affected nor have been affected by this. Or if you joined the NHS after the 1st of April 2012, you won't be affected by this. If if you didn't transition, you won't be affected by this. So yeah, but it's problematic, and it's why everyone in the industry is calling for a delay in the deadlines here, because it's just bonkers that people aren't getting the right information.
Yeah, absolutely. And of course, if you're wondering, are you affected? I showed you how to find that information on the Medics Money website. Just go to the homepage, McCloud drop down, and it's got loads of information on there, links to other YouTube and podcasts that we've done over the last few years. Okay. We've been talking a bit about tax refunds, and you did mention earlier that some people may have more tax to pay. Now, this wasn't in the brochure when this was sold to us. Tell us about how could I get a refund? Does everyone get a refund, or could my tax go up?
So yeah, a lot of people. So we've got an 8-year period, and I'm going to split them into 2 periods here. We've got the 7-year McCloud period, which it runs to the 31st of March 2022. And then we've got the 2022-23 tax year, which has been lumped in with this, but actually isn't part of the pension remedy. It's just they're trying to deal with the admin at the same time. So you could have the situation where actually all your McCloud 7 years actually generates a refund, because actually going, if you are perhaps an older GP or, older consultant who hasn't had significant pay rises in the past few years, then it may well, it probably is likely that you may be in a refund position over that McCloud period. But it still leaves you with 22-23, and 22-23's was the last year before Jeremy Hunt changed the allowance to 60,000. We still had a 40,000 allowance in that year. We had some changes to the pension calculation, but it could still mean that people went over in 22-23. Even though they've got a refund, so they will have to deal with that. But then we have people in that 7-year period who will find, actually, unfortunately, with the rollback, their annual allowance growth goes up, not down. Okay, and who that is principally, there could be multiple reasons for this, and I can't give a definitive list, but my 2 big categories of people would be anyone who worked in hospital, who had a significant pay increases over that period of time or partway through that period, and that could just be as a result of moving up, grades or getting new roles. Not just through the pay inflation. This is just these are people that are jumping into far higher paid roles, and the reason for that is the legacy schemes are linked to a final salary, so you get a final salary link still existing, which is going to give you quite a large pension growth in that year where the uplift is more than inflation. And the second bunch of people will be younger GPs. I'm calling you in that category here, Tommy, even though you probably don't think you are these days. But basically GPs who are probably in the 2008 scheme, who over this period of time probably moved from training into becoming a locum GP, salary GP, GP partner. Because the issue there is that actually the actual pension calculation changes at that point in time, and you can get a slight spike in your pension just because of changing how the calculation method's done in the scheme, which is very good for GPs, but it's going to cause some annual allowance growth issues. So those kind of people could be affected as well. Now, on the positive side, if you get more growth, it means in theory your pension benefits are higher. The downside is eventually when you get to take your pension, which could be way down the line, actually you may decide it was better in the 2015 scheme after all. So you may not actually see that benefit. So it's a bit of a fortunate group really who are slightly getting caught. But again, please don't, it's not my fault. Don't contact me on Twitter on that. But yeah, you will find there are some people that are caught by that. Now for 22-23, I've done a few other of these on other platforms, and quite a few people were saying they've seen really high growth in 22-23. Some people saying above 150,000 growth, which is really, really high for annual allowance. The problem we also still have is the reliability of data here. That hasn't gone away. Ultimately, this system relies on your hospital trust submitting the right data about your pay and your hours. And if they get that wrong in any form, it can skew these calculations. So we have to go back. If you've got a really high growth in any of those years that you cannot explain because actually, you didn't get a mega pay rise, or you paid, even if you did get a pay rise, it didn't go up as much as that, you probably need to get some background information to check that is correct, because we are still seeing errors in these calculations, and that errors is from the fundamental source data being wrong.
Yeah, and when you say check, so if you're a hospital doctor, go back to your payroll and just make sure that the data that they supplied was correct. I mean, this is where the pension saving statement spreadsheet was awesome, but no longer available. But would that be the best way to check that, Andy?
Yeah, I mean, we're hoping the pension saving, the annual allowance and service pay extract spreadsheet, or also called a 05 report, will reappear at some point in England, because it does, that was very clear then. You could see what income was recorded for you for each year. And, in the hospital setting where it's relevant, you could see the actual hours or time that was recorded against you. So either of those two components being wrong could skew your figures. So it's just a quite sensible check. Now, let's assume it comes back, ask for one of those, but at the moment, there's absolutely no point. And I say at the moment, we probably best timestamp this. What is it, 22nd of October or something like that? I may be wrong. 22nd of October. So, it may have come back into play by the time this goes live, but at the moment, it's not available, which, produces complications for people. But I would, if you got one of those mega growths, I would, in the first instance, query it and query how it's been calculated.
Awesome. Okay. We've been banging on to get an annual allowance pay and service extract on this podcast for years. So hopefully most people did manage to get one, because it is, let's be optimistic. It is a really helpful way to just check the data, and it's got your full service history that you can have a look at there. Okay. Should we get into doing your 23-24 tax return if you don't have any information?
Yep, so 23-24, so tax returns have to be completed by and submitted by the 31st of January 2025, normal filing deadlines. And for this year, we have reverted to the normal annual allowance pension tax disclosure. Basically, if you think you are above the allowance, taking into account previous year's unused reliefs, then you have to pay tax and you have to disclose that on your tax return. So time is fastly running out for that. We've seen a few pension saving statements in England come out for 23-24, but really not that many. And to be able to deal with it, you also need to know your position for the previous years. So if you haven't got a 23-24 pension saving statement, nor have had this RPSS letter with the previous years, it's going to be quite difficult to assess. So that puts people into quite a problem area. However, we then have to fall back to some changes that actually did apply during that year. And firstly, this is the first year where the annual allowance goes up from 40,000 to 60,000. So it will give you a lot more allowance available, subject to the fact if you're not tapered, and not tapered people are basically people with roughly taxable income below 200,000. I say roughly because there is a calculation that goes alongside of it, but say 200,000 is the barrier. If you're below 200,000 taxable income, then you'll get a 60,000 allowance. And to therefore exceed that 60,000 allowance, if you are a hospital doctor, you probably need to have had a quite large pay increase in 23-24, which would have put up your legacy scheme growth high, and a combination of also being quite high earning as well. Difficult to say exact sums because everyone's different. If you're a GP, you would probably have to be a combination of high earning and also have a reasonable amount of pension growth in your legacy scheme. So perhaps a slightly older GP in that category. So a lot of people won't be above the 60,000 level. The problem is that the NHS rules and who they send these letters out to, they only send these letters out to if you've gone over 60,000 in any of, or even in one of the schemes. So you could be, the situation where you have gone over by 60,000, but actually it's a combination of two different schemes. But the second bunch of people are those who are tapered, so those who earn above 200,000. They could be below 60,000 but they don't get a 60,000 allowance potentially. So they need to know that information. And it's quite disappointing that we are now, however many years into this now, and we still don't have an automated system that sends these out to the majority of people, because people need to know this data to be able to assess things. So back to your question, 23, 24. What do you do at the moment? If you can have a rough stab at it, and if you know actually I've got 60,000 growth, and bear in mind, that 60,000 growth equates to just going to get my calculator out just to do this in my head. 60,000 divided. Yeah, so in the 2015 scheme, if you adjust in the 2015 scheme, your pension will have to have gone up by over 3,500. So it's quite a high leap, slightly different calculation in the other schemes, but you had to have had quite a sizable increase in your pension. So a lot of people will be under 60,000 in 23, 24. As we get close to the deadline, hopefully we'll get some, again, more pragmatic response from government in terms of perhaps easing the interest and penalties. The risk is if you don't submit this on time, you're liable to interest on any underpaid tax. So you're really kind of exposing yourself to interest charges. And then if we go beyond July next year, if you're looking to have the scheme pay your tax, then again, there is a risk that deadline gets missed. But I think, I think pragmatically they will be okay at the moment and start to adjust things. But yeah, so if you don't do it, if you're really uncertain, you still got to submit your tax return, you just got nothing to base it on, then probably what I would also then do, and you do your tax return yourself, there is an option to put more information in what's called a white space disclosure box. I would put something in there just to say, I have not received my statements and I am therefore unable to assess whether I am liable to a annual allowance pension savings tax charge. And if one does arise at some point in time, then you can go back and correct that. You can repay your tax return within 12 months and resubmit it. So that's fine. Alternatively, if you've got an advisor or you think, actually, this is getting so complicated, I need to get an advisor, go back to what Tommy said at the beginning about contact one or contact your existing advisor and they will no doubt be able to give you a steer on this.
Awesome. Right, before we go down the final question, which is going to be a rabbit hole, which is going to cover contingent decisions, what if you opted out during the remedy period, etc. Before we go down that rabbit hole, I thought it would just be really good to summarize what people need to do and where they can find the information. So should we start by, okay, let's just say you're looking for some extra information on McCloud and you're not quite sure what to do. I would suggest that the Medics Money website is a good place to start. And you just go to the homepage, click this drop down, go to McCloud Judgment. And off this central page, it links everything that we've talked about today. How am I affected? Do I need an accountant or an IFA to get the compensation? What is the remedial pension statement? What is the background to the McCloud? Okay, so that one page, all these little green links, including how the McCloud affects other staff in the NHS, are there for you. So that's if you just want some general information. Are we saying if you go through triage and you need an accountant, then we demonstrated that, right?
Yeah, so first point after that, you've got all your information. The most critical point here is, do you have a letter? And it has to be a remedial pension service statement, not just a pension service statement, a remedial one. Because if you don't have that letter, you cannot do any of this. Okay, all very well, get yourself an advisor lined up, or speak to your advisor and get them lined up to do this when it comes through. But actually, they can't do anything at the moment. So don't then badger them for every 4 weeks going, "Have you done anything?" Because they can't do anything. So that's for you accountants and IFAs out there who are in that boat. But assuming you have got it, you then run through the triage to check whether you actually have to go for a full disclosure. If that comes out, yes, full disclosure, you then have to decide whether you do it yourself, and you're confident to submit 8 years of tax and pension data and get it right, or alternatively, whether you want to appoint someone to assist you in doing that, be it your existing advisor, or if you're not, you don't have an accountant or anyone who's confident in dealing with this, an alternative advisor. And as I said before, in terms of the submitting the data, yes, it points towards accountancy advice, but other people can do it as well. Before they complain at me for not saying that. But yeah, and then we have to wait and see how long it takes them to process this, because it has to then go into Inland Revenue to process, and what happens from there. They'll either issue refunds or they'll issue a request for payment if you're in a liability situation. So, all in all, it's a complicated process. And It also to complicate it further, it includes things like if you had the scheme pay your tax previously, scheme pays elections, that all needs assessing. If you were in England in 2019-20, there was a kind of one-off scheme that year that NHS England picked up the bill for any annual allowance. That needs all adjusting. So there's quite a few things in the background that will also need adjusting as well. So it's complicated. And we haven't been gone to the most complicated bit. So that's the lead in now to the most complicated bit.
Yeah, okay, so we're going down a rabbit hole here, but we know this rabbit hole affects so many of you, but hopefully the resources that we just demonstrated there can help you. If you're there's over 1,000 doctors now going through one of either our financial wellbeing course or our GP partnership course. If you're in one of those, you have access to our private community where all the best experts are there answering your questions on this. And we've been answering loads of questions in there. There's loads of extra resources in there as well. So if you want to come and join that community, go to medicsmoney.co.uk/courses. Although the current ones are sold out and the next ones don't start till next year. So this is like the worst course advert ever. But anyway, if you're not in there, so if you're in there, go there. And there's loads of you in there. But if you're not in there, are we going to say questions in the YouTube comments?
Let's do questions below YouTube, because then we can actually screen them. Because what I tend to find is a lot of you have common questions, which is quite reasonable, because we're all in the same boat. And therefore, we've got a lot of questions about 23, 24, what to do, or a lot of questions that my figures look really wrong, what to do. So your specific circumstances, which are specific to you, also will be relevant to other people. So if we stick them in the YouTube comments, if you're watching on YouTube, if you're listening on the podcast, then I'm not sure what we do there. Jump onto YouTube and subscribe to our channel and just put them in there would be the great thing to do. So yeah, let's do it that way.
Perfect. And we will do our very best. Okay, so that's that. Right, rabbit hole alert, niche content inbound. What happens to those people? And we know that there are so many that opted in or out during the remedy period. So sometimes this is called doing the Hokey-Cokey, as in and out. So should we talk a bit about what we're talking about there to define what we're talking about, the Hokey-Cokey, and then get down the rabbit hole?
Yeah, so basically in any of that remedy period, if you decided to opt out the pension scheme, that may be for a full period, or it may have been for, just a couple of months here and there. That's the Hokey-Cokey were people that went in and came out, as the song implies. But also, you may have made other decisions. So you may have been a doctor that was buying added years contributions, and added years contributions were a way of topping up your pension, and that's more relevant for older doctors because they were phased out. You may have made other decisions to buy, things like Urbo, which was in the 2015 scheme, protected you from a couple of years early retirement factors. So you may have been buying additional costs there. All of these factors, if you made that decision related to having been forced to move to the 2015 scheme, then you have the possibility now to go back and review that decision. Now, in the Urbo case, it only applied to the 2015 scheme. So because of the rollback, it's going to get adjusted. You don't have to, probably not exactly to do with this, but if you opted out at any point or are buying added years and ceased buying those added years, and you can show there is a link to the 2015 scheme, I think it's going to be a fairly light link, because it's going to be difficult to prove otherwise that it wasn't to do with this, because a lot of this was to do with this, especially if the annual allowance calculations change. You'll be able to go back and review that decision. That's called a contingent decision. And that's where it gets really complicated, because first and foremost, you need to get the data. If you're in hospital, the pension scheme will not have known what you earned when you're out of the scheme, because they're not required to notify the pension scheme. So there is work going on in the background in the hospital payroll system to be able to extract data where people have done this and give them the data of what they earned. If you're a GP, I would imagine it's not going to happen at all. I don't think PCSE in England will be releasing any of this information, but you would need to get access to pension returns over that period, or may have to have pension returns created for that period if you hadn't had them done, which could apply towards those latter couple of years. So you need to then work, firstly, you need to work out what the income you earned, which wasn't pensionable, which could have been pensionable. You will then have to make a decision as to what you want to do. And if you want to go back in, then you will have to pay over the pension contributions. What pension contributions get paid over, still a bit of an issue around who's liable to the employer contributions, and that may depend who ended up paying them originally, or whether, if you're in one of those hospital trusts which allowed to recycle it back into your pay, that will be different to one of those hospital trusts that kept the employer contributions themselves. So there's a whole issue around that. There's an issue around actually how long you get to pay this back, because these could be quite sizable contributions if you're out for a while. But then you also need to assess the impact on your pension as to whether the extra contributions you pay now is a good investment, and also assess the tax implications of it as well. And the tax implications are a bit complicated because some of these years are now so old, they are what's called out of scope years, which means even if you do have an annual allowance tax charge, you're not going to get assessed on it because it's out of scope. So all these factors combine to actually, if you are someone in that situation, I know I'm conflicted because I am an advisor, but I would say you guys, you have to be taking advice. You do need an advisor in this because this is into financial planning territory. IFAs, pick your ears up here because this is really where you come into your own here, because you guys are the ones that need to be modelling this to work out actually, is that investment of, say, £20,000 extra contributions worthwhile? What does it give me back in terms of my additional pension? And, to do that, you need someone who understands the tax rules and is able to provide investment advice. Now, in terms of those people, get a load of questions around, actually, I'm one of those people, am I going to get some information? People that opted out in will probably still get RPSSs at this point in time. Okay. They will probably be best to submit those at this point in time. They will then go into a contingent decision process, and that may result in revised figures coming out at the end of it, which will then need to be resubmitted again. The useful thing is the compensation that's available for submitting the forms is available for each piece of work. So we would expect those people to have compensation for the submission process, even if they have to do it twice. Now, there is also then compensation, which is uncosted at the moment, in terms of whether you have to take advice solely because of being forced into the 2015 scheme and what you do there. That's going to be an interesting point because, again, I would imagine people that will need to take advice, they're taking advice because of actually the fact they were put into the 2015 scheme, which is illegal, and therefore they need compensation for the cost of that advice. But I can't say that's definitive because that is down to a case-by-case basis where the pensions agency have to assess whether they can give you compensation or not. But I would be pushing for it if I were in your situation. All in all, though, if you haven't got an RPSS, again, you won't have any information about contingent decisions yet because they haven't actually got to that point in getting the data. There isn't anything you can do. You just have to wait for that data to come through. But if you do have an RPSS now, act on it, wait for the contingent decision information, and then act on it again.
Yeah, awesome. I think, if you're one of those people that opted out of the pension, perhaps without taking advice or because you got panicked or whatever, this could be quite a good opportunity for you to revisit that decision. And as Andy said, the way I like to try and oversimplify things, you might say, but when I think about, I need help with tax? That's what an accountant does. I need help with deciding, should I, opt back in for those years that I opted out or plan for the future? Anything that involves planning for the future, that's where the IFAs come in. Gross oversimplification. Andy's done a way better table on our website, but that's so this is, like, as you said, firmly IFA territory. I feel like we're throwing the IFAs a bit of a hospital pass here, Andy, because this isn't straightforward, but this is where their expertise comes in, isn't it?
Yeah, it is. And there is also a middle group who are neither accountants or IFAs. There's some other experts out there who just do pension modelling but aren't providing advice in any form whatsoever, but they are modelling, and they tend to work with other advisors as well. They also are around to assist in this as well. So yeah, there's a lot of people. Well, I say there's a lot of people. There aren't lots of people out there, and that's the problem. Perhaps I live in those circles, so I think there's a lot of people out there, but there are a limited amount of people that really are in a good position to advise on this. And I'm a big fan of medical specialist people, and this is really one of the cases where you do need a medical specialist to help you through this process, because it's complicated on so many fronts. And I also imagine I may have said something already that, someone would say, one of those experts will say, well, what about this? Because, get that, what about this type of doctor who, spent 3 months here and then 14 months there? And, there are so many little minute complications to it. stupid voice there. Apologies, that wasn't an impersonation of anyone. But, there are so many minute complications here that, in a podcast like this, you can't cover them.
That was your inner Twitter voice when you're getting baited on Twitter. But really good point there. We've tried our best to simplify this. It's an incredibly complex area. Of course, this is not advice. Tax allowances and rates are subject to change. We're recording this before the budget. Who knows what's going to happen there? But that's our usual disclaimer that is, of course, really applies here. And yeah, you do need a specialist for this. And of course, the founding principle of building Medics Money over 10 years ago was that specialist advice was what doctors needed. So all of the best specialist medical accountants and specialist independent, and we know why independent's important, financial advisors, plus some of these people that are just doing pensions work. So if you go to Medics Money, we'll match your unique circumstances to the right advisor for you if you need it. If this hasn't helped you, to help yourself. Oh, we're coming up to the hour here. My legs are getting a bit numb. What else do we need to say? Oh yeah, like and subscribe if you're on YouTube. That really helps the algorithm. And also tell your friends about this. We know so many of you share Medics Money resources because you find it useful, and that is really, really appreciated by all of us. Without you guys sharing it, it just would be me, Andy, Ed, Syra, and Matthew talking amongst ourselves about this stuff. So really delighted that we can help so many of you, but we need you to share it. So just send it to your friends because we really are all in this one together. Subscribe to the podcast, subscribe to our email list where you get the latest updates. What else did I miss, Andy?
Yeah, I'd just generally say if you do get one of these letters, don't panic. Get information, educate yourself to the level you need to be educated, just to understand what's involved. But do seek help if you need it, and help is out there.
Yeah, definitely. Don't do the usual doctor thing of looking at it, thinking it looks confusing, filing it in a drawer, and then 3 months later the deadline's elapsed and it's game over. So it really is time. If you get one of those, it's time to potentially do something. And I really hope this has helped you to do that. Watching on YouTube, put the questions in the comments that aren't answered elsewhere. Check out our website. I'll put most of the links in the show notes as well. Thanks for listening. Thanks for subscribing. Thanks for watching if you're on YouTube. And stay tuned to Medics Money email, social, and YouTube and podcast for all of the latest updates. But thank you so much for your expertise this morning, Andy.
Thank you very much, Aaron.